Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very decent day in the markets today, and hopefully you guys had a very beautiful weekend as well. And in today's action, well, unfortunately, the dip keeps on dipping. We are now closed below the 50-day EMA on the S&P and also closing below the 50-day EMA on the QQQs, something that has not happened since your tariff sell-off. In terms of the market environment right now, you're at extreme fear. A lot of these reads, these extreme fear prints, 15, 14, 13, have not been seen since the tariff sell-off. And that is in spite of the S&P being still relatively close to the all-time highs. We are only about 3.5% off. But it feels as though the world is crumbling around us. If you check social media, you will find very polarized opinions. Some people believe the entire bull market is over and we're heading into a massive recession. Other people think that this is a beautiful dip opportunity before a possible end-of-year rally. So which one is it? Should we be buying this dip or should we be possibly staying away? Well, that is what we're going to determine in today's video as well. So speaking about today's video, we have a few things to cover. Number one, we'll be once again going over where we stand in terms of the news catalyst that came out either today or coming out this week and why the market is feeling the way it's feeling by just constantly selling off every single green that we possibly might have. Additionally, thereafter, we are going to take a look at the technicals, guys, go through a full rundown, the S&P, the Qs, and your market breadth, right? Take a look at the minor sectors to check on the rotation, or rather, lack thereof recently. Thereafter, we will do the same thing across our big tech list down here of these big tech names, which ones are set up nicely for some swing trades and or some long-term portfolio buys. At the very end of the video, guys, rather than going through the biggest gainers and losers of the day, because we know that we've had a bearish leaning bias recently and that most of the more volatile names are always the same ones that we tend to cover every single video because they're high beta, right? Since we've had a lot of red, I'll be taking you guys through about 20 different stocks that I enjoy. Rather than just going through this list, we've covered some of these stocks many times, like the neo cloud providers, some of the high beta names. We will be taking a look at, of all the companies that have sold off recently, what are my favorite buys? Either number one for core positions or number two for some of the high beta names. So that's what we'll do at the very end of the video. So let's jump right into it, shall we? In terms of the S&P today, down 0.93%, the Qs down 0.85%, and the rotation was kind of nowhere to be seen today. A big red day all across the board. Most of all your major indexes falling under. We did have Google coming up with some pretty big news today, and that was Warren Buffett coming in with a huge buy, 17 million shares of Google for a total of $4.3 billion worth of position that was started in Q3, more than likely around the prices of between $160 and $180 of Google. We just got that news Friday after the close, and as a result, over the course of today's action, Google did have some pretty favorable price appreciation, that is. Across the board down here, whether it's software or some of these semiconductor names, they were down. I'll remind you, huge week in terms of NVIDIA earnings too. Financials down all across the board. Healthcare was on a very nice rally, but starting to kind of curl over to the downside, and the bottom half of the market nowhere to be seen. So although the S&P is only down 3.5% from the highs, you guys might feel like it's down a whole lot more, and it's normal because a lot of names since the month of, the end of the month of September, right, all kind of through October, some names were challenged, and then throughout the early stages of November, those challenges have continued, especially across the board on some of the high beta names. Big tech, for the most part, has been holding up the markets. Healthcare has been holding up the markets as well. Financials haven't been doing much of anything, but if you guys have a growth-exposed portfolio, you guys are probably down far more than the S&P right now, and it's completely normal. The only things that have been holding up the market so far are largely big tech, and that kind of carries into our concentration risk. Moving on to the one-day relative performance, communication services and utilities, the only two sectors that made it out of the day alive. Everything else out to the downside here. On the 1 week relative, you might remember last week, this was finally flipping all to the green, but now, unfortunately, pivoting right back to the red. Only healthcare printing green over the past 1 week of trade. Everything else to the downside, led by consumer cyclicals and technology. And on the 1 month relative performance, well, the month of November isn't what it was supposed to be, right? We were all expecting some great big gains in the month of November and carrying into December for that year-end rally, but statistics are always very challenging for that reason. You're never too sure what you're going to get. September and October were supposed to be choppy with a bearish leaning bias. However, September and October were some of the best months that we had. So will November end up being a very red, rare month? Possibly, and we'll see what we have in store for December. But there's a few key things to keep a lookout for, guys, in terms of our bearish catalysts on the near-term horizon, right? Number one has to be the jobs report that's coming up. Excuse me, wrong chart right there. If you take a look at the jobs, right? Jobs is going to be a big factor this week. We know that the White House said last week upon the government reopening that the October jobs report and the inflation data may never be released. And that left a bad taste in many people's mouths, namely analysts who are deriving a possibility for a Fed rate cut. The Fed rate cut odds for the month of December now stand at a very low 43%. Just about a week ago, before the government reopened, they were over 60%. And when Jerome Powell spoke a few weeks ago, they were over 90% in terms of those rate cuts. But then Jerome Powell threw cold water on that, saying that the December rate cut was not a foregone conclusion. Then the government reopened, said that we were not going to have any October jobs data. So essentially leaving the Fed flying blind into the December period. And now, this Thursday, we get the infamous September jobs report. So the data might be a little bit stale at this point in time, but it should provide us some sort of direction. Is the jobs market still relatively resilient, although soft? Or are things kind of falling off a cliff? So this one will be out on Thursday. It's going to be a very big day on Thursday, of course. We have NVIDIA earnings coming up after the close on the Wednesday session. So two very big market moving events overall. Additionally, the administration has been trying its best to address some of the recent inflation concerns surrounding tariffs. The Trump administration on Friday after the close saying that they wanted to cut tariffs on goods like coffee, bananas, and beef in a bid to slash consumer prices. So affordability is definitely front and center on their minds. You might remember last week as well, they were coming out with an idea for 50-year mortgages because a lot of the younger demographic just cannot afford homes after home prices skyrocketed after the pandemic as well. Moving on further, more affordability issues, right? Trump promising to send $2,000 tariff dividend checks probably in the middle of next year, so maybe second half of 2026. Still unclear if those will be straight cash stimulus checks or possibly tax rebates. The administration has not provided their final guidance on that, but you can clearly see, right? If affordability is the issue, they're trying different things right now. The 50-year mortgages, you may think that's a pro, you may think that's a con. It's a pro for the banks, it's a con for the consumer, at least in the long run, because they pay more interest. Their monthly payments go down, but they will pay over the life of that mortgage a lot more in total interest, of course. Moving on further, now that we also know that the S&P has closed below our 50-day EMAs, what are the statistics thereafter? Well, if you take a look right here, we have spent over 138 days above the 50-day EMA. Now, when we pull back under it, what happens? Well, you will see right here that we have some statistics. 1 week after, mostly positive, at least for all of these hit points right there. 2 weeks after, well, you got some pretty positive data. 1 month later, every single data point is indeed positive. 2 and 3 months as well. Now, of course, you have to take these statistics with a bit of a grain of salt because we know that there are several bearish narratives at hand right now, and some of them can't be solved in the snap of a finger, just focusing on statistics and technical analysis. I will remind you of the current market outlook in terms of the short-term bearish narratives at play versus the long-term bullish tailwinds. We derived these about 3 weeks ago, and I was telling you guys to be careful. We put this video out back here, and I was telling you guys, get out of margin, raise a bit of cash, start playing things very defensively, and don't be too greedy. The market is entering hard mode. There are no more easy trades like the neo cloud providers in September and October that were going up every single day. Gold was also a very easy trade. There are very easy narrative trades just about a month or two ago. As of right now, no more easy trades. The market's not cooperating, and most of all sectors, except for healthcare, are just pulling back. They'll have 1 day of rally or 2 days of rally and give it all back in one single day. You're at a lack of you have a lack of some trends right now, yeah? So the bearish narratives at play, I'll remind you, the AI bubble and the market is overvalued with the breadth and concentration risk. After we have some neo cloud providers reporting last week like NBIS, Iris Energy, CoreWeave, all of them showed that although they have a ton of money in their backlogs, current revenues are still somewhat soft, and also the construction timelines are still somewhat uncertain to the effect that they have to be perfect if they want to achieve those revenue run rates. We also know the OpenAI drama about the 1.4 trillion in obligations. Will they be able to pay? Will they not be able to pay? We also haven't really seen any big tech deals recently. It seems as though every day during September and October, we were getting new deals from big tech throwing billions of dollars around to various different companies. We have not had that. So we have a bit of a lack of positive news in terms of the AI trade right now, but we do get to hear from NVIDIA the Wednesday after the close. The technicals were stretched. We were commenting up here that we were stretched in relation to the 12 weekly. We've corrected that, but also take a look at the monthly charts too, guys. We are still very stretched away from the 12 EMA. Usually you don't get this far stretched from the 12 EMA with at least some sort of a short-term correction. The government shutdown and the data dump, when it's over, well, we'll be hearing from the jobs report on Thursday. We'll see what happens. The jobs creation softening, it's going to go in line with the Thursday jobs report. The consumer status, the fact that consumers are very soft in terms of discretionary spending. Now, the banks and most data points, such as income and spending, do still remain very resilient, but people's anecdotal experiences are such that they are complaining about their lack of purchasing power, and that's been the case for the last year, but the pressure is building. It adds to the list of bearish narratives. And lastly, but not least, the concerns surrounding the private credit and the rise in corporate bankruptcies as a result. You guys have heard from some subprime auto lenders recently. A couple have kind of went underwater, and some of these small and regional banks, well, their shares have pretty much done absolutely nothing since these events about a few weeks ago, about a month ago at this point, as a matter of fact. So all of those are your bearish narratives, and you will quickly realize that none of these can be undone in one day of trade. No. You have to get positive macro data, and you also have to keep getting positive AI results as well, because right now the prevailing sentiment is indeed one of extreme fear surrounding all these bearish catalysts. Don't forget your bullish tailwinds, though. You still have strong GDP. You have rate cuts that are supposed to come in December. We will see what happens there. You do have quantitative tightening, which will be ending in the month of December, though. You still have low unemployment, 4.3%, which is historically low. You have low-ish inflation, although we haven't received the CPI report in a long time. You got the Trueflation Index sitting about 2.55%. I like this index because it measures 15 to 17 million data points every single day. And although we have an upswing here from the months of July and August, we're still not in the 3.5%, 4.5%. So the inflation is still not a concern for the markets right now, at least in my opinion. You had very strong earnings in Q3. I'll remind you guys, of all companies, 91% of S&P companies that reported so far, 82% of them reported positive EPS, and 77% of them reported positive revenues as well. Your mentions of economic slowdowns in the economy on earnings calls were also at historical lows, hitting their lowest point since 2007. So earnings, for the most part, and we did cover many of them on the channel, were really good. You have the AI megatrend, long-term bullish tailwind, which is in stark contrast to people's current sentiment around AI. And then you also have $4 trillion of tax cuts, which are going to be starting at the end of this year and into 2026 as well. So once again in the market, it's a question of, filtering out some of the short-term noise and focusing on your long-term bullish tailwinds and focusing on high-quality companies that may have been selling off recently as a result of maybe just some sentiment and some soft overall liquidity in the markets after running up in a straight line for 7 months. May just be time for a bit of a dip. And as a result, am I a buyer? Am I still bullish on these markets in the medium to long term? Yes, but I would be lying to you if I told you that the sell-off is possibly done. Can we correct a little bit further? Absolutely, guys. You get multiple 5% pullbacks in any given market several times per year. So far this year, we've only gotten one, and it was a big one, right? During the tariff sell-off right now, it's been almost straight up. We haven't really touched the moving averages. People were getting very, very bullish in September and October, arguably too bullish and too greedy. The markets were in easy mode, and also you built up a ton of margin debt as well, right? The 2-year rate of change into the end of the month of September into early October were some of the highest rates that we had seen in the past 20 years, roughly, and also the amount of margin debt. This is two parts, guys. I mean, that's why I like to look at the rate, right? Because the rate of change, it doesn't factor in for all the new people that have come to the markets this year. The margin debt overall will climb as more and more people participate in the markets, right? This would be a problem if you had the exact same amount of people participating as you did in 2000, 2007, 2018, and 2021. We know the market participants are higher than they were at those point in time. So although you are at a record level of margin debt, guys, right? It's also as a byproduct of more people participating in the markets. But, you know, you guys feel it as well, right? If I had to sum it up, this entire run right here, this was easy mode. Now the markets are into hard mode, right? A lot of people, now that the SPY is down 3.5%, if you guys are in high beta stocks, you guys might be down like, 10, 15, maybe even 20%. So if that's the case, guys, you really need to check your allocations and check your margin, right? It's very easy when the markets are moving higher in, just a straight line and there's no concerns in the world, right? It's very easy. You think the markets are so easy, you just want to deploy more and more and more. But don't forget, when you're doing that, you're putting on more and more risk. And when the markets start curling over, the weekly MACD has been bullish. The momentum has been bullish for 6-7 months. When it starts to curl, and you got a whole bunch of noise coming at you from all aspects, right? It's very easy to close all your positions out of fear, no longer make logical and rational decisions, and panic. And that's not what we want to do. At least that's not what I want to teach on the channel as well. So that being said, guys, that's your big introduction. I'll do as many of these as I possibly can while trying to still keep the videos short, but just always want to give you guys some context as to where we are in the markets. And I want you guys to focus on the medium to long term, because nobody can predict day-to-day price action. I can't, you can't, and the best people in the world can't. Sure, you can use some technical analysis, you can use Fibonacci retracement levels, but when you're dealing with a lot of sentiment narratives and narratives that are predicated on news releases, either from AI-specific companies or government data dump releases, right? Well, you can say what you want on the charts, but if anything happens, obviously it's going to change the price action quite drastically, because these are the narratives that the market is currently focused on. So keep that in mind. Long-term, the market will always move on fundamentals, but short-term, sometimes it moves on narratives and it moves on sentiment, so never forget that. So that's it for your introduction. Hopefully you enjoyed that. Now, let's jump into some charts. And we're going to start off with our index analysis. So directly into the SPY, closing down into the 50-day EMA and on relatively low market breadth as well. If you take a look at your breadth indicators, they got better and then we got a lot worse. You'll notice a common thing here, that the markets really are not having the lack of the data, right? So this piece of news right here, this October jobs report never being released and the Fed flying blind and basically unwinding the probabilities for a rate cut, that's what did the most amount of damage here in the last 3 days of trade. And you can see it on the market breadth, right? Participants are just not having it, not deploying liquidity anymore. And we had a very nice breadth bounce, and now we're unwinding. So percentage of stocks above their 20-day EMA, once again, clipping into the lows, under 30% of all stocks. So not a very broad market. You will have to correct that. And I think that this week is going to have some clearing events, right? NVIDIA is either going to ignite some further fears surrounding AI or clear a bunch of fears surrounding AI. So that's going to be clearing event number one. Clearing event number two is going to be the jobs report. If the jobs report comes in very soft for September, these rate cut odds are going to skyrocket, which might bring some relief to the markets. Funny how that works, to where bad data would be good data because it would hint at a rate cut, right? However, it might just be very volatile. So we will see how the markets react to it. No need to predict, but you will have to have some breadth improvements here if you want to see the markets regain their daily and weekly uptrends overall. As of right now, the bears are in full control of breadth, of momentum. It's just a pure dip right now, not even a correction. Correction is when you get to 10% off the S&P, right? Moving on to the percentage of stocks above their 50-day EMA, guys. Lowest that we've seen since tariffs at this point. 32% of all stocks are above their 50-day EMA. And it makes sense because the SPY just lost it as well, right? And percentage of stocks above their 200-day EMA, we are now below the 50% line, something that we have not seen since the month of August. So your breadth continues to decline. The sell-off is now broadening all across the board. So we will see what this week is going to have in store for us. But as in terms of the price action right now, you got to watch out for the line in the sand, guys. 661. right? You break that, it's your first daily downtrend in over 7 months. So it would be notable to us. If you do make that happen, we would not be surprised if it does happen. You'd be coming down here, 652 down about 647, your next area of support, almost very close to the 26 EMA. And you'll notice here that in 2024, we came very close to the 26 a few times, right? This year, only tariffs and then never since. That's what I mean when I say the markets have been very extended, right? So these are very normal pullbacks, especially when you get some bearish short-term narratives at play, yeah? That being said, your weekly MACD is now crossing to the downside as well, so the bears do have some momentum. So if you do come down here, guys, it will be some great opportunities to buy, but do not expect an instantaneous turnaround, right? If you give back your entire weekly move, you may have to do it in 2 stages, which might mean that the entire rest of the month of November and December might just be playing catch up, right? So keep that in mind. They do have a chance to save. The bulls have a chance to save. That will only happen if NVIDIA has really good earnings and the jobs report comes out in a very decent fashion as well. Moving on to the Qs right now. Qs, same concept, line in the sand, 598, 599. You lose that is your first daily downtrend in over 6 to 7 months at this point in time. If you do that, well, you're coming down here to your lower area of support, 595 to 590, which would be your weekly higher lows. Your weekly MACD is crossing as well, which does show that the bulls, or rather the bears, control your short-term momentum. So just be careful out there. It's a time to play things slowly. I'm not going to say that this is the bottom or this is the bottom. No, but what I will say, it's a great opportunity to go shopping for some of your favorite long-term companies, of course. It's just that short-term swing trades, guys, when you're out of a trend and out of direction, the short-term swing trades, guys, get a little bit more complicated overall. So keep that in mind, as a lot of tech right now is having quite a decent amount of pain. Moving on to financials. Financials down 1.9%. And unfortunately, guys, unwinding the entire daily uptrend, unwound right now. So loss of the daily uptrend and now setting, unfortunately, a weekly downtrend in motion, which means your monthly consolidation continues at this point in time. I will bring your attention to the banks on the monthly timeframes. JP Morgan, way too extended from its own 12-month EMA. It usually does not get that extended without pulling back close to it. So maybe that is another opportunity for some further consolidation on your banks. We were very overbought on the monthly timeframes too. And now that your short-term bears are claiming a little bit of momentum control, if you unwind this into the end of the month of November, because of the lower rate cut odds, which impacts their net interest margins, you may get further sell-offs across the board. Goldman Sachs, you might be coming down here as well. Names like Morgan Stanley, all the names, pay attention to the monthly charts, guys. We are extended right now on everything. Not only were we extended on the SPY, on the QQQs, but also when you break down some of the, the best performing names of the entire year, they're just way too high, and this is natural consolidation. So you will be looking for a monthly higher low. The bulls have tons of space, and we'll be looking for them to put a stop to this in around the 50, which is your 12 EMA on the monthly chart. In terms of XLV, your best performing index is now running a bit out of gas, right? So keep a look right there. They try to push now twice into those 153, 154 highs. If you falter a little bit, you're coming right back down here, 148 to 145 support area, which is the area that we cracked as resistance. It should be acting as a nice back test for support. That being said, the weekly is still in a gorgeous weekly uptrend, but if you run out of steam, as I said, you're coming right back down there. It'll be a nice opportunity to maybe build some further swing trade longs across our favorite healthcare names or just the index as a whole, as we will just correct and move a bit closer to some of your shorter term moving averages. SMH right now also remains very, very skittish, right? So daily on the verge of printing the daily downtrend, no closes below 337. You get me a close below 337, you lose a few things at the same time. The 50 daily EMA, which we have not lost since the tariff lows, and also at the same time, it would be a daily downtrend, something that we have not had in 6-7 months at this point in time. Notice no closes below. They were able to maintain the uptrends, right? Or at least a sideways range. This would be a very bearish thing for your lead bull right now and will lead us into further weekly consolidation into the 12. And if that's not enough, well, you will be heading a little bit lower. Look at the monthly expansion here, guys. It would just be very normal for a pullback. If NVIDIA can save the day, maybe we could put a stop here and run a bit more. But eventually, gravity is going to have to catch up to this sector as well. We will have to put in some form of a monthly higher low eventually. And what better time to do it right now than with all the bearish narratives that we have at hand? It would just be picture perfect to capitalize on the bearish narratives for us to set a monthly higher low. So I would not be surprised if NVIDIA earnings are very strong and they sell off the name nevertheless. I'm not going to predict that. I'm just saying I would not be surprised. It would just be all too perfect in terms of the price action, normal price action that we're kind of looking for on these names. IWM Russell losing, now daily downtrend, of course, flushing through our support range, 240 down to 237. And now we are doing exactly what I thought we were going to do, right? This was a nice weekly uptrend. You lost the weekly uptrend. When you lose the weekly uptrend, one time frame higher always. Monthly consolidation, 6-7 months of upside. Now you're getting the pullback, right? 231 down to 225 into this little pocket. That is for these markets. Oops, excuse me, I got the dividends on. This is previous resistance highs, and now could be a nice little backtest area for the Russell right there. 12-month EMA. So pay attention how it reacts to here. 230 down to 225. Heavy momentum, right? Don't play real estate with the markets. Don't just say, well, just because it's at support, it must be a long, right? No, it matters how does it come into the support. If it comes in very soft, right? If it comes in like this, very super soft into a support, then it makes sense. If it comes down super hard into a support, well, that's where you got to be a little bit cautious. So we will see how the price action reacts to this level, but it is definitely coming into the area. XLP could provide a nice little proxy trade for maybe some low beta. If you guys have very heavy tech names right now, usually value does start catching a bid sooner rather than later in the context of a somewhat soft market. That being said, the bulls don't control much right now in terms of the daily, right? They got a nice little bounce going right here. You're going to have to confirm this daily uptrend. On the weekly, guys, it's still looking very soft. Weekly downtrend, as I said, nice bounce. And you are into a very large area of support, which is previous resistance highs from 2021, 2022. Very soft into the monthly 50 EMA. Right? Monthly 50 EMA. What you're essentially saying right here is times are as bad as they were during the fall sell-off of 2023, during COVID, or during the big tariff events of 2018. It does not happen too often, and more often than not, it could be a very nice location to kind of balance some of your very bullish bets on tech or some of the growth themes with some XLP. Utilities not performing too poorly today, trying to get a bit of a bounce together, respecting the 12 EMA. We will see sometimes utilities acts as a bit of a defensive sector in the context of a tech and growth sell-off. So we'll have a look at how utilities react. Some of my favorite names right now, Duke Energy, which we've been highlighting for this breakout retest. Very strong name right there. Vistra, not too bad, but it does have a bit of an AI connotation, so it tends to get brought down with the overall tech trade. NextEra Energy, also not too bad. Perfectly reacting from our zone right here, going for the breakout as well. So pay attention to some of the electric utilities names. They could be in favor if the market keeps being soft. And lastly, real estate right down here. Further into support, right? Talking about 41 down to about 39 is your big support range for real estate. It hasn't been doing anything because the yields and the bonds have just been all over the place. So mortgage companies have been very choppy recently. I'm still a fan of these into 2026, 2027, but it's going to be very bumpy in the short term. And the same thing for home builders. I am bullish on home builders coming into late 2026 into 2027, but it will be extremely bumpy in the short term with the consumer narratives, with the interest rate narratives, et cetera, et cetera, et cetera. Taking a look at the VIX right now, the VIX clipping into 22.23. Some of the highs we have not seen since that China tariff news, fear-induced sell-off. You remember a few Fridays ago at this point in time. So the VIX, the market is clearly telling you that they are concerned about more things than one right now. This is a great opportunity to be selling some options, selling some put options below the market on some of your favorite stocks or on stocks that have ran an absolute ton, selling some covered calls and just looking to protect a little bit of your gains as we embark into a retracement period of time in the markets. Moving on to the 10 and 20-year yields. Well, the yields were down a little bit today. Gosh knows why, but they've been all over the place, guys, right? All over the place on the 10, all over the place on the 20 in the past 2 weeks since that government reopening. I still do think we will have a bearish bias in terms of coming down on the 10 and 20, and as such, the bonds should be having a bullish leaning bias, but it will be a very slow and methodical trade. The bonds perhaps catching a little bit of a fear bid today, but I mean, every single time we've had some fear-inducing catalysts over the past few months, right? Bonds haven't really done anything, and even our next asset as well, gold, which is supposed to be some sort of an asset to hedge against some fear in overall equities. Well, gold's been coming down, right? We had a very nice breakout, but same thing. Since that government reopening, guys, we've just been straight down. So gold kind of following other assets and following equities to the downside. We will see if the bulls have it in them to protect this higher low. Around 4,000, right, is where you're looking for the bulls to get a bounce, get a higher low together, and go for the continuation of this daily uptrend that they started, and possibly go into a further push on the weekly time frames. But there is an argument to be made that gold might just embark into another phase of consolidation. This was a huge rally, and maybe we just need to spend some time consolidating sideways. We will see what happens. The monthly is still extended, so the bulls really need to protect this range right here, guys. 4,040 down to about 3,900. We really need to protect this. If you engulf and lose this, guys, I'm pretty sure that I can almost safely bet that we will be heading into monthly consolidation. That would only happen, in my opinion, if the indexes pull further into monthly consolidation as well. Gold can sometimes be several hedges, right? However, when an asset has ran so much and people are sitting on gains, if people just get fearful of the entire markets, they will sell off gold as well. And you only have to look at some fearful moments in time during the markets to understand that gold gets sold off just as any other asset gets sold off, right? During the COVID panic, they sold off gold before the rest of the market rallied with gold. During the 2022 bear market, gold didn't perform too well. And all throughout history, right, when the markets were a little bit challenging, gold does sell off. I mean, look at the tariff fear sell-off of 2018, right? So gold sometimes can act as a short-term inflation hedge. Sometimes, like this time, it was a central banking hedge away from the US dollar. But other times, when people are sitting on tremendous gains, they just sell everything indiscriminately. Moving on to Bitcoin and Ethereum right now. Bitcoin continues to sell off in a very big fashion, guys. Daily oversold conditions on the RSI. When's the last time that happened? A very long time ago, guys. Back in February was the last time we had oversold conditions on Bitcoin. Full daily downtrend control by the bears, and now into our second area of defense. Prior support, current resistance, and now current support as well. Closing below the 50 weekly EMA. This is something we have not lost in a very long time, since 2023. As a result, weekly downtrend very pronounced right now. And on the monthly time frame, this is big monthly consolidation. So we will hope to see the bulls stop this one here. If not, the next stop is all the way down here, low 80s, and that would be a very large monthly retracement, similar to a lot of other growth names, right? All of anything that's been risk on recently, at least in the past 2 months, has just been getting sold off regardless, right? As concentration remains a risk and the bearish catalyst build. So am I calling this as the bottom of Bitcoin? No, but I have been adding some Bitcoin there. I'm adding some Bitcoin here, and Bitcoin for me is a long-term thesis. All of my Bitcoin ads that I'm doing are not short-term trades. They're for the long-term expansion thesis of the Bitcoin network. Moving on further here to Ethereum. Ethereum is kind of the same concept. It's just been very soft, right? Daily downtrend continues at this point. The daily bears are in full control. Weekly downtrend also in full control right now. And the monthly timeframes selling off in a very, very big fashion, guys. It's a huge sell-off on ETH from the tops of the month of September, roughly 40%. Now, the retracement size is still what in terms of, well, you know, in the area that we're kind of targeting here, the infamous golden pocket between the 50 and 618 EMAs. They need to hold on to 3,000, guys. Last stop down here is about 2850. Need to hold this level. That's your monthly 26 EMA as well. You give back any more, and it's going to be very tough to V-shape this. If anything, you might just be looking at a very long and drawn-out recovery story for ETH. Same thing. I was saying that here was a decent ad for ETH. Here is a decent ad for ETH, but all that is in the context of a long-term thesis, not for swing trades. For swing trades, you need a daily uptrend. If we don't have a daily uptrend, it's tough to position, right, on the daily, because you can get just further unwound extremely quickly. When they give you a daily uptrend, at least you can set a stop loss below the daily higher lows, and you can go for weekly trend expansion with a good risk to reward ratio. But at least you have a clearly defined stop loss. You have a tradable bottom of sorts. It doesn't mean that it's going to work out, right? Not all trades work out, but at least you have a defined confirmation that you can play off of, rather than trying to time a bottom when you don't have any trend confirmation. So keep that in mind across Bitcoin and Ethereum. That's it for our overall market rundown. I ran through those quickly because I want to get through these tech names and then to my favorite 20 stocks in the market right now. So let us move through our big tech names, right? And we're going to start off with Apple. So Apple, one of the last standing bulls, now starting to lose the daily uptrend. Equal highs and lower lows. Daily downtrend in motion right now. We've been talking about this for the last few weeks. If Apple bulls are tired up here, they will probably have to have a bit of a retest down here close to the 12 EMA. That is roughly around 255 to 250. Not looking great for further expansion. They can save, but I would not be surprised if Apple as well embarks on a phase of consolidation. The weekly is extended. The monthly time frame is also extended. It would be a very healthy pullback. Apple should be having a very bullish Q4. That's what they guided for, at least in terms of their iPhone 17 sales. However, the valuation up here for some long-term buys, not the biggest fan. I will revisit some possible swing trades around the 250 location, but for now, I'm not adding any long-term Apple shares, nor am I building any short-term swing trades during this consolidation phase. AMD right now, very choppy price action, right? The bulls tried to get a nice bounce going, and now we're kind of unwinding a little bit. The clearest time frame for me on AMD is the weekly. If we have to consolidate a little bit more, you might be coming right back down to this weekly 12 EMA. You can see how extended we are, right? Very beautiful weekly uptrend after the OpenAI news, and we never really gave back much. So AMD is super strong. They had their investor conference day last week. Lisa Su increased the guidance for next year as well, but it's just not helping right now. Everything associated with AI is being sold off regardless, even in spite of companies that have very strong forward fundamentals. That being said, guys, at 240 and lower, the valuation is decent for some long-term portfolio buys, so I would be a fan of adding some AMD shares if we go for a full weekly retracement and a full monthly retracement as well, as we are quite extended right now. But in terms of short-term swing trades, guys, not the biggest fan. We will see what happens to this stock after NVIDIA earnings. The bulls have a chance to save this one, but it's just been very choppy. Moving on to Amazon right now. This is one of my favorite stocks in the market as of currently. Daily downtrend in motion right now, not even close to oversold conditions because of the massive earnings pop, but daily downtrend right into our support range, 238 down to about 227. Call it 240 down to 230, right? What you're seeing right now is a classic breakout retest, but if the markets continue falling, I wouldn't be surprised if Amazon goes for a full earnings retracement. Now that's good, right? Well, it's not good in terms of your short-term gains, but it's good because the market is providing you with a re-entry for a very high-quality company that just proved to you that they were beginning to be having a very nice upcoming Q4 and a very nice year in 2026 as well, with all lines of business firing on full cylinders. At 230, the forward price to earnings is under a 30. It's a 1.5 peg. So Amazon for me is indeed a long-term portfolio buy. And if you come down any more, you will find me selling some short put options down here at the 220 range, closer to the 12 EMA. So possible for some short puts, yes, and possible for some long-term buys. Yes. Moving on to Google right now with the Warren Buffett news. Very strong push up here up to 295. If the markets were green today, I would not have been surprised if Google held up these gains and maybe pushed even more. But since the markets were very soft, guys, we have like a triple top right now, right? So we will see. We had the daily downtrend going. They got it back with the Warren Buffett news. It's just been very, very, very choppy, right? Maybe a lack of overall buyers up here, or rather lack of follow through, right? It's very tough for people to get behind this trade when it's ran so much. Everybody kind of feels as if they've missed the boat. It's been very choppy up here, weekly overbought conditions, and the monthly chart is super extended. So no matter which time frame you look at this one, you get a little bit of vertigo, right? You think the stock has ran tremendously, and I do agree. So swing trade longs from here, very greedy, and I'm not the biggest fan, but longer term portfolio buys. If Google embarks on some consolidation with all the bullish catalysts that it's been having recently, it will be a buying opportunity for me to add to my long-term portfolio. It is currently trading around 290 at a 27 forward price to earnings. A 1.8 peg, not the most commanding valuation, but this one, if you come back down to around the 250 range for some healthy consolidation, I'll be a really big fan, guys, of kind of adding more shares to my long-term portfolio, because when I add shares to my long-term portfolio, I don't care about the daily swings. Arguably, I don't even care about the weekly swings. I'm adding them for the next 3, 4, 5, 10 years type of thing. Moving on to good old Meta, the stock that just can't catch a bid recently. Daily bears remain in full short-term control. Daily downtrend right now, still daily oversold conditions. It's been in daily oversold for a while. We bounced out of oversold immediately during tariffs because we had the kind of the tariff pause and reversal there. The last time it was this oversold, guys, was in 2022 amidst similar concerns about Meta spending too much money on capital expenditures. We're coming into support 600 down to 558. Meta, tough to swing trade right now. Why? Because you don't have a daily uptrend. You don't really have a tradable bottom. You are just guessing. So I'm not the biggest fan of short-term swing trades, but what I am a fan of is some longer term shares, right? Looking at around the 630 when we did the valuation, it was a 21 forward price to earnings. It's now probably under a 20, a 1.63 peg, which is very decent, guys. And into support into some oversold conditions. So this one, now that it's down over 20% from the all-time highs, 25% currently to be specific, very nice add. The weekly bears are in full short-term control right now. The monthly is in full retracement mode. Usually when we can find Meta in the context of overall bull markets between the 12 and 26, it's been great times to add every single time, right? You may not see the benefits of those ads in the short term, but longer term, when you can find meta around these valuations, it is a great company to add. Moving on to Microsoft right now. Microsoft as well, a little bit soft on the day, but very, very choppy price action recently inside candles, right? So lack of direction on the trend. To get a new daily uptrend, you need to crack 513, crack 513. Okay, the daily bulls have saved the uptrend right now, and we've also saved a flush of a very big support zone. But if you move lower than this guy right here, 495, 494, daily downtrend, further weekly consolidation by Microsoft, and additionally, further monthly consolidation. Microsoft would be a very nice add for me down here around the 475. Here is a nibble. Here's when I start to do some more full-size buys to add to the long-term portfolio, just working with historical standards, right? When Microsoft comes into the 12 in the context of overall bull markets, it has been a very nice time to add. And I'll remind you, if we pull down there, that'll be a nice 15% sell-off from the highs. The valuation when we did it at 520 after earnings showed that Microsoft was a 33 forward price to earnings, a little bit rich. Come down there to 475. This will be probably close to or under a 30 and a price to earnings growth ratio of around 1.75. Also a lot more manageable than it was all the way up here at 550. Moving on to Netflix right now, the stock that just had a 10-for-1 split. These are more manageable prices for Netflix, right? Both for selling some short put options or, if you guys can only do round shares, great stock to be buying some round shares right now. Price action very choppy. We got a nice bounce together leading into the split, and sadly we're unwinding a lot. But Netflix, unfortunately, they erased all of my support resistance boxes. So I guess I'll have to kind of do them again, right? This was kind of the area that we were dealing with, right? This whole 115 down about 112 region overall. I mean, you can extend it a little bit more. You can see what we're dealing with, right? Big prior support level for the bulls. We are now under it again as resistance, under the 200-day EMA. And also, the weekly timeframes are not looking that strong right now. It is still some form of a weekly downtrend. Back testing this area as resistance. If we do fall a little bit more, you're probably heading down to the monthly 12 EMA, which we're almost at right now, or the second line of defense would be down here under $100. And that would be a phenomenal area on Netflix, guys, to add some shares. At that point, they'd be down 25% from the highs. Currently, we're down about 20% from the highs. Phenomenal ad, in my opinion, for Netflix overall. I apologize. When they did the split, they erased all my fundamentals. I'll redo them for you guys tomorrow, but it's now going to be trading under a 30 forward price to earnings, and the PEG ratio is around a 1.7. So Netflix is one of my favorite companies to be buying in the markets right now. On to NVIDIA, that has their earnings coming up on the Wednesday session, of course. So the price action in the short term is going to be anybody's guess. This stock's going to move 7-8% up or down after earnings, more likely than not. That's the expected move. 7% to the upside would put us very close to the post-GTC highs. And 7-8% to the downside will put us right back here into support. Down here, 171 to 165. If we can see NVIDIA down here with phenomenal earnings, I'll be a big fan of buying this company overall. They're protecting the weekly with their lives. We will see, can we get expansion or will we get the breakdown? If you get the breakdown, you might be nervous, but never forget, guys, what we're going for here, monthly consolidation. If we pull back there close to the 12, it'll be a phenomenal buying opportunity, just as it has been every single time it's done it so far since the rally started 2 years ago at this point. And shave 10% off these valuations right now. NVIDIA is probably trading right now currently around a 27, 28 forward price to earnings and close to a 1.3 on average price to earnings growth. We will finalize the EPS growth rates Wednesday with NVIDIA's guidance, and I'll give you guys an updated valuation after their earnings. But still, solid company right now. One of my favorite buys in the market too. Moving on to good old Tesla. Tesla, 1.13 to the upside, but I had a line here. I mean, I can draw a box if you guys really want to, right? It's a small little box here of resistance. You perfectly back-tested it. You flushed it, back-tested it, and now the short-term bears still remain in control. So you can clearly see one thing across most of all these names on this list, right? Other than Google, everything else is embarking into some form of daily or weekly consolidation, and Tesla is no different. Daily downtrend, lower highs are set, and now we'll be looking, can the bulls protect this 383 low right down there? Weekly also unwinding weekly downtrend. So daily downtrend, weekly downtrend, we are coming into monthly consolidation, the bottom end of which could probably come all the way down here, 360 to 340. So be careful on all these names. When you know that we're losing the daily and the weekly timeframes, guys, those can take days and weeks to reverse to the upside. So don't get too greedy building up a whole bunch of long positions just because you're trusting a real estate level. Always know that we can come lower and test your monthly moving averages. And a matter of fact, they're much better buys. When you test some of the long-term monthly moving averages, those are some of the best buys that you can possibly find on some of your favorite companies. So just pay attention to it. The same thing can be said about names like Palantir, right? Palantir's been holding up relatively well, but we might just be looking for the continuation of a daily downtrend. If we keep moving lower, I mean, check the futures right now. We're oscillating, but every day, rather a lot of days in the past 2 weeks, right? Futures can be green and then something happens overnight and then immediately at the open, we just start flushing, right? So if Palantir gets dropped down in the mix as well, and we go for this daily downtrend and flush of this support, which we're desperately trying to hold right now, 170, well, that'll be a loss of the daily uptrend. It'll be a loss of the weekly uptrend. Your higher lows are there as well. We have not lost the weekly uptrend on Palantir since the tariff sell-off, so it should be notable to you if that happens. If it does happen, what are you doing? You're going for the good old monthly consolidation, probably in around the 12 EMA, which Palantir has tested a few times on its monstrous rally, and that would not look so awkward for the price. Matter of fact, I would be interested in Palantir down there. You'd do a good job of cooling off the monthly timeframes. I'm not saying it's going down there. I'm just saying that if we do find it down there, I would be interested. Moving on to SOFI right now. SOFI down 2.8%. SOFI has been super volatile, man. Phenomenal earnings. They unwound earnings. Then a nice pop after, you know, the news of the government shutdown would be ending. And then when the news came out that the government shutdown would be ending, but that we were going to have a lack of data, well, SOFI as well as the rest of financials kind of just got beat down and beat down hard. Overhead resistance 30 up to about 28.42. We'll see what the bulls can do with this, right? Sometimes they can get through straight shot. Other times they struggled for a long time with that area. Instead of predicting short-term price action, I'd rather tell you guys how I'm playing SOFI. Playing short puts down here, 25 to 22. This is the biggest area of support that you have in the short term, guys. So that being said, 25 to 22. Previous support would be looking for beautiful monthly consolidation and joining up with the good old 12 EMA. This one also was very extended. People thought it was very easy. I'm pretty sure a lot of you guys built up some huge long positions up here, looking for the good old breakout, forgetting where you were in the context of this monthly chart. And as a result, now people might be underwater and people are just being bearish on SOFI in the, you know, they're kind of forgetting all the things that SOFI said during their earnings, which are phenomenal, forgetting the fact that we are trading at a good valuation right now because you're getting nervous because you positioned at the wrong time, arguably, or you just positioned too heavy, or your call options just don't have enough time on them, right? But if I do see a bit of a bid or a bit of a bid location down here, 25 to 22, I will be adding some long-term shares and also playing the heck out of the wheel strategy and maybe even adding some leap call options as well in that location. On to Uber. Uber holding up as best as they can. Line in the sand is down here under 90, crushed 90. And sadly, it's the daily downtrend. Sadly, it's the progression of the weekly downtrend and monthly consolidation as well, possibly down into here to the 12-month EMA, right around 86. So low to mid 80s. I've been calling out this region for a while. This entire time that we've been chopping around down here, wondering if we get the follow through, right? Well, the market right now, the way the market is shaping up, it's the perfect excuse to consolidate everything that needs to be consolidated, right? So if Uber has to come down and touch the 12 EMA, I would be a big fan down here of picking up a few more shares for my long-term portfolio and also playing the wheel strategy down here too. In around 90, the valuation is pretty good. Forward price to earnings of 25, a 1.6 peg. Phenomenal earnings recently, and as such, Uber does remain front and center in my list of names to buy. Don't worry, I'll recap all this stuff at the end of the video, which we're almost into right now. And lastly, good old TSM. So TSM struggling to hold on to this area, 280. Daily downtrend is likely in motion right now. If the markets stay weak, you would not be surprised to see TSM unwind. It has been a very wide and volatile range. Now, NVIDIA earnings can possibly save this, but if they don't, just remember what's at play right here, yeah? It is going to be the furtherance of a weekly downtrend. We are challenging the 12 EMA. If that's not enough, remember the high time frames, guys. We pulled off way too far from this 12 EMA, and every time that happens, something in the market occurs to give us a nice phase of consolidation. So if we lose 280, your next stop arguably is going to be down here, 250. This would be a phenomenal location to be adding some TSM for the long-term portfolio. It's not a bad buy up here. We did the valuation at 295, right? It's just a small little addition up here and then DCA through the levels down to about 250, right? Tough to predict the short-term price action when you have a bearish leaning bias on the short-term timeframes and a cross of a weekly MACD. These crosses of the weekly MACD, guys, pay attention, because a lot of these names haven't done that in like 6 months. So when you see it, it has to be notable to you, and you have to kind of anticipate the full monthly retracement, and as a result, prepare some buying power or add it to your list to be picking up. Right now, it's currently trading at a 28 forward P at about the 290 region, 1.68 forward peg. If you come down there, right, another 10% lower, or roughly, it's going to be a forward 25. It's going to be a 1.5 peg. Phenomenal company to be buying down there. And that kind of wraps up everything for the overall market preview. So what we did today, I'll just a recap quickly. We contrasted the bearish short-term narratives, the fact that we are overextended on the monthly timeframes on the S&P, the Qs, and a lot of your favorite names. And right now is a perfect pretext for some extended consolidation. However, don't forget, a lot of your favorite companies have very solid bullish tailwinds. And these should be some of the reasons that you're buying, right? Try not to be emotional. Try not to be too nervous with these bearish catalysts. The best thing you can do in the markets, guys, is what the Warren Buffett, Charlie Munger used to talk about this all the time, and other super investors too. The markets are all about, it's a big puzzle, right? You got to put together the pieces of the puzzle, and it's a lot of deciphering what is noise and what are actually true bearish and bullish signals, right? And most of the time, you always want to be focusing more heavily on the bullish macro tailwinds until you see something bad erode, like macro, bad macro, or, a Fed hiking cycle with record inflation. Then you can kind of say, okay, the market is cooked, at least for the next 4, 5, 6 months. When you just have short-term bearish catalyst concerns, but you do have pretty dominant bullish tailwinds, then it's a skew, right? Your bull-bear scale can be skewed more towards the long side, and you can have a buy the dip mentality. Just don't do too much too soon. We raised these concerns a few weeks ago, and I wanted you guys to be a little bit careful and cautious leading into the month of November, right? Because we saw these coming. So hopefully you guys are able to save some buying power, and hopefully you guys are able to identify a shopping list that will interest you into the next coming weeks during this entire market consolidation period. That being said, what are some of my favorite buys in the markets right now? So rather than covering the biggest gainers and losers of the day, what are 20 of my favorite stocks? I'll be dividing this section into 2. Number 1, I'm going to throw at you guys like 10 and 12 core portfolio plays for my long-term portfolio that I own for the most part, okay? And why I deem them to be good buys. We'll go through them quickly, but a lot of these names have been selling off in a pretty big fashion, and we're getting some really nice deals on them. So I want to bring them to your guys' attention. It's not that they're boring, but it's names that you guys know, okay? So don't be surprised if you know a lot of these names. Matter of fact, the best thing you can do is concentrate into your favorite boring, high quality, high conviction, high competitive advantage, and high moat names. So I'll give you guys 10 to 12 of those names. And then after, I'll give you guys some names that I'm looking at in terms of the high beta, high growth names that have been coming down very rapidly in the most recent last few weeks. So let's get into it. And keep in mind, these companies, guys, are for longer term buys, right? Not swing trades. The market really isn't conducive for some nice swing trades right now during this consolidation phase. So as part of my core holdings, which companies am I adding to for the long-term portfolios? Companies with very strong fundamentals. Company number 1, Rigetti Quantum Compute. I'm just kidding, guys. Seriously? You thought I was going to go down that path? No shot. Company number 1, SPGI, S&P Global. Company needs no introduction. They did have really good earnings recently. They've been consolidating. This stock is 15% off of their all-time highs. Super strong moats, the analytics business, the indices business overall, and of course their credit rating business too. This stock has done absolutely nothing for a better part of the last year and a half, currently back to 2021 highs with fundamentals improving. I am adding to this one overall. Stock number 2, Mercado Libre. We covered their earnings recently. They had ridiculous earnings, guys, growing revenue and GMV at fast clips, both for their e-commerce business, but also their fintech business as well. We did the valuation at $2,300. It was a great buy under a 1 peg, so you can trust me when I say 10% lower than that. It's a screaming buy for me. Beautiful monthly consolidation into our 26 EMA. I will be picking up more shares of Mercado Libre. Very solid company. Companies number 3 and 4 need no introduction at all. Visa and MasterCard. We covered their earnings when they had them just a few short weeks ago. Visa, very rare to find this one under a 30 forward price to earnings, and that was at 349, so now 7-8% more. You're trading at like a 25 almost forward price to earnings. Phenomenal. It's been consolidating for the last 7-8 months, not doing too much of anything, but one thing's for sure, when you can find Visa around or lower than the 12 EMA, great buying opportunity for the long-term portfolio, just some very healthy consolidation. And MasterCard, the exact same thing, right? Consolidating for the last few months, coming into support right now, 535 to 519. Phenomenal company for some long-term portfolios. These are all companies with super strong competitive advantages, super wide moats overall, and they should almost be no-brainer buys for you. Another company we just recently covered, Netflix. I'll be adding Netflix from 110 down to about the mid-90s. This little pocket between the 12 and 26. Our next support area, decent valuation, very solid company, but this run might be, the run was very extended and now we're just consolidating in a very healthy fashion. So I do want to add some Netflix shares. Another company we could be looking at is Booking.com. Now, the reason Booking.com was down 5% today is because Google said that they were going to release a AI version of their Google Flights website. Now, of course, that's just Google Flights. They'll be providing an AI agent to help you with your, travel purposes or whatnot. But Booking.com owns so many subsidiaries. They do phenomenal buybacks. We covered their earnings recently. This company is currently sold off from the top right now, 17%. Usually always a great pickup, especially we did the valuation at 5,000, guys. It was under a 24 price to earnings, a 1.16 peg, and a 5% free cash flow yield. Very strong company, to say the least. Another company we can be looking at is Meta. We brought this one up earlier. Meta, I am adding some shares for all the reasons that we previously described, the valuation being number one, but number two, it's like 25% off the all-time highs. You don't often find Meta all the way down here. Am I saying it's going to instantly recover? No, but in terms of a long-term bet, I can't think of a higher quality company, especially as part of the Mag 7. Another company we can add to is going to be NVIDIA. As I said, after their earnings, if you come down to low 170s, I will be adding some shares of NVIDIA, just some natural consolidation, 12 EMA. Jensen raised guidance about 2 weeks ago, but everybody has since forgotten. So hopefully he will reiterate it on Wednesday, the fact that they're going for $500 billion over the next 6 quarters. Valuation on NVIDIA is quite fair right now. I know. You might see the $4.5 trillion market cap and have a little bit of pause. They have the fundamentals to kind of back that up in terms of their earnings growth and in terms of their revenue growth as well. A few more, Amazon. I told you guys, all these companies are companies that you guys know very well. And that's the point. They're companies that should possibly already be in your long-term portfolios. Now is a good time to add when the markets are giving you some nice discounts. They just had their earnings. Their earnings were fantastic. As I said, 230 down to 210 for me is a buy for the long-term portfolio. On to the next company, Uber. We just covered it as well. Uber for me is a buy, 90 down to the $80 pocket. Phenomenal earnings, decent valuation overall. I would not be surprised if Uber spends the next few years expanding their market cap and expanding their reach more. EPS will be nice, 26 through 2028, and revenue climbing up and to the right. In 2028, this company is going to be making $77 billion in revenue and also making a push into the autonomous vehicle landscape. And a last little one for you guys, Airbnb. This company has done nothing for the longest time, but down here, the valuation makes a lot of sense. 118 out of 100, decent time to either start a position if you like it or add to your position if you already have it. The valuation down here is quite manageable, right? Low 20s multiple, a 1.54 peg, and a 6.15 free cash flow yield. Those are just a lot of the companies that I'm looking to add to my long-term portfolios. Some of my favorite bets overall in terms of just some core positions that I like to build upon, companies that I will be holding for the next 3, 5, 10 plus years. They have strong moats, strong competitive advantages. They are arguably leaders in their respective spaces and do deserve a second look if those are the types of companies that you do enjoy also having in your long-term portfolios. Now, let's get into some of the high beta growth names that I might be looking for. So when I have a long-term portfolio, 80 to 85% of my holdings are in my core positions, right? But there is a small portion of my portfolio and even in some of my tax advantage accounts where I go for big growth over time, right? Where I put a few of my favorite growth companies out there. So let's go through a few of my favorite growth companies out there. Number one, Robinhood. Yes, Robinhood of all companies, right? We did their valuation after earnings at 140. We found them to be closer to a 3 peg right now. If you do the valuation again, I'm going to be looking for this one around $100, right? If we slide a little bit more at $100, the valuation makes a lot of sense. 100 divided by their forward EPS, 46.51 forward price to earnings, divide that by their EPS growth, and you are looking at a, right, give me a second here, 22.5, you're looking at a 2-peg. Finally, Robinhood around a 2-peg, which is much more manageable. Robinhood would be on my list of companies. If you come back down for the full monthly retracement when everybody's going to be saying it's over, it's over, it's over, no, I might be looking to position for Robinhood's next phase of growth as they embark into banking and many different things for the next few years. So I'll be looking to capitalize on these declines on Robinhood. Company number 2, Shopify. I don't talk about it that much, but I do talk about it when it provides some great entry opportunities. Down here, this little pocket, 130 to 120 is my first ad. My final ad for this company will come into the lower 100s. We covered their earnings. They had extremely solid earnings, guys. This company's growing really, really fast in terms of revenue. If you haven't seen my earnings breakdown, definitely go watch it. At 160, the company was rich, trading very rich. If we get a pullback down here into the 122 low $100 range, you shave off a ton in terms of this valuation, and it makes a lot more sense. So Shopify will be one that I'll be looking to play on this monthly consolidation, maybe adding for its next phase of growth over the next few years. I'll remind you, Shopify, man, their forward projections here for EPS are phenomenal. Their forward projections for revenue. Look at this revenue growth by Shopify, man. They'll be doubling almost their revenue in the next 4 years. So definitely a company that I want to participate in, but I wait for big pullbacks instead of chasing the highs of the market with everybody else. The next company I'm looking at to maybe add some positions here, New Holdings, Brazilian fintech player. I will cover their earnings tomorrow. They had earnings last week. Their earnings are pretty decent, but they have been consolidating a little bit. New Holdings for me is a buy. First little area to buy down here, 15 to 14. Just backtesting some of our previous highs. Nice monthly uptrend coming into here. But if you go for the full monthly retracement, 14 to 13, that'll be best location. So this area, a nibble for me. Down here, which would be a nice sell-off from the highs, guys. I'll be patient. I'll wait for it. 15, either 7, 8, or 15%. I'll be looking to add some New Holdings. Their growth rates are phenomenal. You only have to look at the forecasts for that. If you take a look here, EPS, phenomenal EPS growth here, a doubling to be specific in the next few years. And look at their revenue from 2025 onwards. Also very strong revenue growth over the next few years. Very solid fintech player out there. Suffice to say, I do like this one a lot better than PayPal or other fintech names in the market. Another foreign company that I'm looking at very closely now is Grab. Grab had their earnings just about a few weeks ago at this time, right? Or I don't know why you can't see it, but anyways, they don't know why you can't see their earnings, but Grab had some pretty good earnings, suffice to say. That being said, they're pulling back into one of my favorite locations right now, right? Previous monthly resistance, which is monthly support, just going for a nice monthly retrace on this position right now. $5 into the $4 range is going to be the area that I might be very interested in building a position for Grab. $22 billion company right now. They are moving into profitability. As we can see, they've swung from negative margins onto positive margins right now, which is something I always look for as an investor in these fast-growing companies. Analyst price targets all above the current price. EPS negative to positive and expanding, and revenue growth as well for the next few years is very solid. If you guys have been around Asia, you guys have probably used Grab services. They're the Uber of Asia. Uber actually has a stake in this company. And as we pull back here from some of the highs, man, very nice discounts, 20% to be specific from recent highs. So very solid company overall. And I'm going to be looking forward to participating in this region right here, building some shares that I can hold for the next few years. Moving on to the next company, Hims. Yes, Hims. It's come back. The last time that I bought this company, guys, was here around 27, and I benefited from a phenomenal rally throughout this year. When the position was up 100%, I closed half, made the trade free. I might be looking to get back into the half that I just sold right now, into the 35 to 30 location. I think that this one is a pretty decent buy. Mid-30s, you're trading at a 3 forward price to sales for a company that, has its headline problems with the GLP-1 partnerships, et cetera, but they have so many different products, EPS up and to the right for the next few years, and the revenue growth is really where it's at, guys, right? They'll be doubling the revenue over the next few years. Hims currently trading at an $8 billion market cap. You may love this company, you may hate this company, but I do think that it's a very nice sell down period for the stock right now and could be a very interesting play as a small position and maybe hold for the next 2, 3, 4 years as they expand their business model. Another company that's looking to expand their business model, but that got crushed after earnings, is Elf Beauty. Elf Beauty obviously struggling with the Trump tariffs as they kind of gain some pricing power. They raised their prices by $1. We covered their earnings, right? And they went down because of the soft guidance. It's been a very tough landscape for cosmetic brands, but we did cover them during earnings and saying that Elf Beauty is the best performing company in terms of revenue growth, in terms of other metrics, in terms of gaining market share. It's the best performing company in a very tough landscape, which is the cosmetics landscape right now. Elf Beauty down here, 70 down to about $50 is a pocket where I will be looking to add a few more shares. The last time that I bought shares was here. If they provide me another entry opportunity, I will be looking very closely at it as well. It is currently trading well under a 1 peg. We did the valuation after earnings at 92. So you can imagine, right, from 92 to where we are right now, that's an additional 20% sell-off, which means this peg ratio will be like a 0.7, right? And the forward price to sales will be under a 2.5. This is a $4 billion company, which in the next few years will be generating a ton of revenue. Look at this revenue increase right here, right? So they're trading very cheap right now in terms of their forward projections, but we know cosmetics has not been very easy. And overall, it might be getting better here in the next 2-3 years. So I like Elf Beauty, but I'm not expecting a massive quick recovery. If anything, I'll just be accumulating some shares that I can keep into the next few years as part of the whole consumer discretionary trade coming back. And then 2 thematic plays, arguably my 2 favorite thematic plays at the current time. There's many more, but if I had to kind of put them down to 2 favorite plays right now, Iris Energy. This one is one that I will be building some shares for my long-term portfolio. We covered their earnings recently in the month of November. I'm looking for a multi-year thesis of expansion. I'm not looking for a quick recovery right here. I know that we can possibly find more, but 40s into maybe the 30s area for a full monthly retracement when everybody is selling the stock. Retail is getting rid of this stock fast. You know who's not getting rid of this stock? Institutions. Of all the 13Fs that have came out in the past week, we're seeing a lot more institutional ownership of this stock overall, and they have a long-term business plan in terms of time horizons, right? It will take them some time to get their data centers up and running, but at least Iris Energy is vertically integrated. They manage most of all their construction projects, so their timelines are a bit more accurate. They do have vertical integration for their Canadian data center units as well, which means that their cost per kilowatt hour is somewhat lower than the industry standard. And they have a ton of room, right, went across almost 3 gigawatts here over the next few years. The problem with these companies is that most of the revenue will be coming in for 2027 and 2028 in terms of annual recurring revenue run rates. So I like this company at all, but as I said, since we're in an unwind right now, I'll be slowly accumulating some positions, and I'm looking to hold them for the next 2-3 years. That is my thesis. My thesis is not for a short-term swing trade. I will absorb the drawdowns and accumulate more of a position. It's a company that I like very much. And lastly, talking about some energy plays, one of my favorite ones right now is Vistra. This one has very nice offerings in terms of natural gas, nuclear, solar, and battery storage. At 180 right now, it's trading at a 0.7 peg, a low forward price to earnings multiple as well. It's consolidated in a very nice fashion from the highs here, 20% into our 12-month EMA, into prior support as well. We know Vistra is very, very volatile as well because it's closely tied into the AI trade, because most of their contracts serve a lot of those data centers too. EPS up and to the right, fast-growing EPS for a utilities company over the next few years. Arguably some of the fastest growth in EPS that we can see across the board, and revenue as well, scaling revenue very nicely over the next few years. So although there are many energy companies out there to choose from, Vistra and arguably maybe GE Vernova as a nice runner-up. Now, they don't do energy directly. They do turbines, which then are utilized by energy companies and data centers alike, right, in indirect fashions. Those 2 companies are some that I'll be looking into a bit more to build some positions to kind of carry into the, the energy portion of the AI trade. So that is everything that I have for you guys in today's video. Those are a lot of my favorite plays. Of course, guys, there are many more. You can make arguments for stocks. You might be asking me, why didn't you talk about Bloom Energy? Why didn't you talk about EOSE? Trust me, guys, I know. Why don't you talk about Circle? Why don't you talk about CoreWeave? Why don't you talk about Tom Lee's BMNR that's just been flushing? Don't you still enjoy those plays? Yeah, but guys, when I'm deriving a top 20, right, I got to go with the actual top 20, not the speculative top 20, right? Not the plays that I do believe will have the fastest recovery gains when it happens, right? That's not what we're doing. That would be a different video. If I'm looking to just build companies with a thesis for the next 2-3 years, and you're asking me which of those plays I prefer, those are my favorites, right? Can we go outside of the favorites for some very small bets? Sure, maybe if you guys really want to, but if I'm putting together a top 20, those are the ones that I'll be paying the closest attention to. Obviously, there are many more stocks in the market, there are many more opportunities, and I'll bring you guys the most opportunities that I can on a weekly basis, but those are some of my favorite plays. Hopefully you guys enjoyed today's video. I know I went through today's video fast, but you know, there was a lot to cover. I speak fast. Some of you guys like it, some of you guys don't. Try to keep the video under an hour and 10 minutes. And with that, that's everything, guys. So if you enjoyed today's video, consider dropping a like. Consider subscribing to the channel as well if you're new. We do these every Monday to Friday after the close. And last but not least, if you have any questions, please feel free to leave them down below in the comment section, and I will gladly answer as soon as possible. That's it for me. Take care. Try to wind down some of that margin, guys, and try not to be too greedy in these markets. As I said, I can't predict the short-term price action. You can't either. And you know the bears are getting more and more short-term control of these narratives. So just play things casually and be stoic. No emotions in the market, of course. Take care. See you tomorrow after the close. Have a good day. Peace.